time for your weekly financial workout with your elite personal trainers, Ryan and Bob Payne, guiding you on how to build a stronger and more robust financial plan. So get ready. We're about to pump you up. Live from the greatest city in the world, this is No Payne No Gain.
Good morning. It's No Payne No Gain Financial Radio. I'm your host, Ryan Payne, president of Payne Capital Management, along with Chief Investment Officer, the man with the plan, and of course my father, Big Bob Payne. Good morning, Dad. What's shaking?
Morning, Rye. It's a beautiful day here in Santa Barbara. We're out here celebrating your mom's 65th birthday with the whole family, so I don't think life could ever be better.
I failed to mention we are on location today. Payne Capital Management, we're going national, baby. Out here for a family trip in Santa Barbara, California. I highly recommend it. And even though we're away, we have a great show this morning to help you on your path to financial freedom. We're going to talk about mythbusters. Bob and I are going to discuss some conventional wisdom you often hear when it comes to retirement planning that, well, let's say isn't really that accurate. We're going to talk about, do you have a broker or a real financial advisor? Bob and I are going to discern between the two, make sure you're getting the right advice from the right type of professional, along with, of course, this week's financial pornography, a lot of information out there that you just need to avoid at all costs. And for our spotlight segment, since this is an all Payne family, Payne affair, we have Chris Payne on the show today, who's with us in Santa Barbara today, to talk about a case that he worked on, a real retirement plan, and just show you some of the flaws that these retirees were making with their plan. So lots of stuff to cover this morning. Let's get right to it. Let's talk about busting some myths in the financial world. And Bob, there's a lot of myths out there that sound very logical in theory, but aren't necessarily true. Let's talk about a couple of these financial myths and why they're untrue. And one that we hear often is shifting from stocks to bonds removes the volatility from your portfolio. Why isn't that necessarily true?
Right. The problem with that statement is that all investments, whether it's a bond, a fixed income investment, a stock, a commodity, even cash, has volatility in terms of its changes in price and it changes in price on a daily basis. So you may reduce the volatility from moving from your stock portfolio to your bond portfolio, but I'll tell you what's more important is the type of bond that you're switching into. Over your career, Rye, people have always tried to hedge risk. And what's the only way you can hedge risk with 100% certainty?
Luckily, because I do have the scars on my back to prove it, Bob, being through a lot of different types of markets. And we talk about this on the show all the time. We're a big believer in you should own your bonds outright. Don't own a bond fund. And 2008 is the best example of that. We saw a lot of these high yield funds, a lot of these more exotic mutual funds where you don't necessarily know what they're owning within the actual fund. Some of them went down close to 20%. That's the same as being in the stock market. If I'm going to buy a safe investment to hedge my risk out in the market and it can go down 20%, that's not a safe investment to hedge your risk.
No, Rye, you're right, because when it comes down to managing risk, Benjamin Graham, who was Warren Buffett's mentor, he summed it all up. If you manage the downside in a portfolio and you avoid the big loss, the upside will take care of itself. So managing risk is one of the hardest things to do simply because it's about predicting. What's the problem with predicting the future, Rye?
It's impossible, Bob.
Therefore, you're better to assess all the facts that you know and know what you don't know. That gives you a probability edge, and all people have a probability edge if they have a diversified, well-thought-out portfolio. That's the only way you're going to have a high probability of achieving your financial goals without getting hit, with that big loss that comes from taking way too much risk.
Yeah, and that's when it comes to financial planning and when you're getting close to retirement. In retirement, one of the biggest, most important variables is how are you managing your risk. It's more important than getting all the upside. We're in a bull market right now, but what should be keeping you up at night and what you need to assess on your portfolio is when that bear market comes, the market goes down, and invariably over time it is, how well is my portfolio protected? You have to run that analysis. Another big myth that we often see is when you're in retirement, you're going to need less income than when you're working. And I can tell you from all the retirees we work with, that's not really the case.
It's not the case, right? I think the biggest surprise I've had from my clients over the last 40 years is when they retire, they're busier than when they're working. And they can't figure out where did all the time go and what were they doing while they were working. A lot of people are trying to figure out whether they were actually working when they were back in employment. But the thing is, you want to live your life. And the whole idea of working hard, having a plan, is getting to a point in life where you can enjoy yourself. And, enjoyment takes a lot of income. So what I'm finding is most people, where the rule of thumb back in our old financial planning days was, you live on 70, 80% of your after-tax income.
Yeah.
That's a myth. You live 100% of your income when you're in retirement.
Yeah, it's funny you said that because we're out in California this week, and I was out seeing a long-term client of ours back from the 80s, Bob.
Whoa.
Yeah, they're one of our longest clients, over 35 years, we figured the other day. And we sat with them. We've worked with them for years over years, and now they're approaching their 70s. And they're dialing back the work, and we ran what their expenses look like, and they're not going down at all in retirement. We went through and assessed, well, if they're not working anymore, they're going to start taking a lot more trips. And if anything, we said, well, we might have to dial back what you're spending in retirement. So it's definitely a fallacy. You think, well, I'm going to be retired, I'm not going to travel as much. With the way healthcare is, and we're living a lot longer, living more vibrant lives, we even have a lot of clients now in their 90s that are still traveling. So I would definitely assume you're going to spend at least what you're spending when you're working in retirement. That's a much more realistic way to run your projections.
Rye, when I first opened that account 35 years ago, they lived in Philadelphia. And since, he was in the healthcare industry, he ended up working out at Stanford. And now she works in Stanford as an administrator. But, back when I started with them 35 years ago, our theme was make a lot of money and have a lot of fun. And so the nice thing is with our strategy, they've made a lot of money. And now in retirement, they're going to have a blast.
Oh, yeah. They're actually on their way to Tuscany to do a cooking class with 8 of their friends. So that's my kind of retirement. And if you're thinking to yourself right now, I need to figure these things out. Am I taking too much risk in my portfolio? If there's a downturn, am I going to see my portfolio capitulate? Are you thinking, I need a plan so I can really enjoy retirement, go to Tuscany, have a great time? Here's your shot to do it. If you're one of the next 10 callers and you have over $200,000 saved for retirement, Bob and I will run for you our total financial master plan, and we'll do it with no obligation or cost. That's a full review that'll analyze everything. So we'll look at your taxes. If you bring in last year's tax return, we have a CPA partner that'll review it to make sure you're not paying unnecessary taxes. If you dust off those legal documents, I know they're in the basement, you haven't looked at them in 10 years, we have an estate planner that'll review all your legal docs at no cost to see what changes you need to make to your estate plan. And then finally, bring in those statements everywhere they're held, what is the 401k, IRAs, annuities, insurance accounts, brokerage accounts. We're going to review all of it on a simple 3-page document, our investment analysis spreadsheet, and we're going to look at diversification. What hidden risk do you have in your portfolio? We're going to point it out. Do you own bond funds? We're going to look at income. Income is so critical in retirement. We're going to show you how to increase or optimize the income on your portfolio to make it retirement ready. And we're going to look at fees. Are you being overcharged on your investments? There's a lot of hidden costs in those portfolios. Those mutual funds, annuities are expensive. We're going to show you all the cost in your portfolio and help you to reduce the cost. And then finally, what we're going to do is we're going to tie it all together into one total financial master plan to determine, is your money going to outlive you, or are you going to outlive your money, utilizing strategies our family has literally worked on for over 40 years to take your family from point A to point B with the least amount of risk and the highest odds of success.
The only way we can help you is for you to call 844-PLAN-NYC. That's 844-752-6692. If you're one of the next 10 callers and you've saved over $200,000 for your retirement, our team will run for you your own personal total financial master plan. There's no obligation. There's no cost. Just give us a call. 844-PLAN-NYC. That's 844-752-6692. This is Bob Payne. This is Rye Payne. And we are No Payne, No Gain Financial Radio.
With a constantly changing financial landscape, having a written, customized plan is more important than ever. In New York City, turn to the team at Payne Capital Management. Call 844-PLAN-NYC to schedule a complimentary financial review. That's 844-PLAN-NYC, 844-752-6692. Find out how to better prepare for your financial future. 844-PLAN-NYC. That's 844-752-6692. It's time for the weekly No Payne No Gain market update with the team at Payne Capital Management here in New York City.
Hey, good morning. This is Bob Payne, Chief Investment Officer here at Payne Capital Management. And this week marked the end of the third quarter. And as we enter the fourth quarter of 2017, it gives me pause to just scratch my head wondering, where the heck did this year go? Well, we all realize that time flies whether you're having fun or not. As I always say, bull markets are much more fun than bear markets. So I'm happy to report that the bull market is alive and well in the third quarter of 2017 with the S&P 500, the NASDAQ, and the Dow all racking up their 8th consecutive quarterly advance. Now, this is the longest winning streak since 1997. But as well as we've done here in the U.S., more money's been made in Europe, Japan, and the emerging markets. Now, in my conversations with our clients, I still find a surprising lack of optimism for the economy and the stock market. I think it's largely because of the upcycle that we're in. Typically don't last this long. However, this is a secular bull market, and they tend to last longer and surprise more to the upside. Now, I know there's always things to be concerned about, but based on my analysis, I continue to be optimistic. I continue to see a favorable environment for financial assets. But of course, as conditions change, so will my guidance. So stay invested, stay tuned, and for now, be bullish. Now, if you're wondering, where is my portfolio going in this big booming bull market? Why sit there and wonder when you could know? Give us a call at 844-PLAN-NYC. That's 844-752-6692. This is Bob Payne. We are No Payne, No Gain Financial Radio.
With a constantly changing financial landscape, having a written, customized plan is more important than ever. In New York City, turn to the team at Payne Capital Management. Call 844-PLAN-NYC to schedule a complimentary financial review. That's 844-PLAN-NYC, 844-752-6692. Find out how to better prepare for your financial future. 844-PLAN-NYC. That's 844-752-6692. Time for some New York City trivia. Did you know pinball was once banned in the city? It was in place until 1978. Speaking of pinballs, if you're tired of watching your accounts bounce all over the place, you should keep listening to No Payne, No Gain.
Ryan Payne, Bob Payne, No Payne, No Gain Financial Radio. And Bob and I's main goal at Payne Capital is to make sure you're getting the best and most timely advice when it comes to your money. So in light of the recent Equifax breach, we want to make sure you're protecting your wealth online. So if you text the word bullish, that's bullish, BULLISH, to 555-888, again, the word bullish, to 555-888. You can access Bob and I's recent interview with cybersecurity expert Jessica Robinson, and we discussed some of the ways you can safeguard yourself online. Cybersecurity is a big issue, so get the best information. You can check out our interview at texting the word bullish to 555-888. Again, the word bullish to 555-888. And in this segment of the show, what we'd like to talk about is, but are they really a nice person? Now, all too often you have a broker or advisor who's doing less than a stellar job, but you continue to work with them simply out of loyalty or because they're a really nice person. Bob, let's discuss the ridiculousness of these statements and why it's important to make sure you're receiving the help and advice you really need instead of just maintaining a relationship for, let's say, strictly personal reasons.
Ryan, what we've been learning recently now that we've introduced our Financial 360 financial portal That's a window into everyone's financial life. We're finding that most people don't really have a financial plan. They're working with the same stockbroker they started with 30, 40 years ago. And let's face it, stockbrokers are basically product salesmen. They're not financial planners. Now, they all claim to be, right? They even have a title, financial advisor, financial consultant. But what do you typically get with a stockbroker?
Well, I think the problem is when you talk to your advisor, or probably more accurately, broker, a lot of times you just don't understand much of what they're talking about. They're usually very confusing, sounds very sophisticated. So you think to yourself, well, I'm probably getting the planning I need. I just don't speak the language of financial speak. And I think that's probably the disconnect, where in reality, if you don't understand what someone's explaining to you, that's their problem, not your problem.
The genesis of A to B that we use for all our clients was really getting people to understand what you own and know why you own it. And I think that's the one thing that people don't really do a good job of explaining. And a lot of times, just because you've known the person for so long, you're afraid you might insult them if you ask a question. So that's the one problem. The other problem I see is that most of the advisors out there are your age or my age, right?
Well, all due respect to you, Bob, they're all around your age, in their 60s, ready to retire themselves. And that's a little disconcerting. If I'm trying to plan my retirement and my advisor or broker is trying to plan their retirement, this could be a real problem.
Well, I always feel at Payne Capital, we have the best of both worlds. You got the guy with the scar tissue and the stomach lining from, having gone through all these ups and downs of the markets over 40 years, got all the gray hair. And now we have, a team of certified financial planners, great financial advisors who are out there servicing our clients. We got the energy of the 20, 30, and 40-year-olds with the wisdom of this old dog sitting next to you today.
Bob, I know it's gray hair, but man, that is one heck of a head of hair. If our listeners can only see it, they'd really appreciate what a great head of hair you have. The other thing that you may find is, and this is a statement I hear very often with your advisor or broker, is, well, I never get together for reviews and I rarely ever get my phone calls returned, but I know my advisor is really busy and has worked with my dad for years, so I assume I'm being taken care of as well. I mean, that's ridiculous.
That is ridiculous. I think the one thing that people have to remember at all times is it's their money. It's about their goals, about their dreams, not about hurting somebody's feelings. And I think if you don't have a process-driven strategy where your advisor, your fiduciary is rebalancing your portfolio on a quarterly basis with your approval, meeting with you at least once a year, face-to-face, to make sure you understand what you own and know why you own it, and show you what your portfolio not only looks like today, but what your financial life looks like for the rest of your life. I mean, what I love about our 360 financial portal, Rye, is because it updates in real time. Whenever our clients want to drop in to see how they're doing, not only tells them how much money they're making, shows them what they're worth today, shows them what their portfolio value is today, tells them how they're allocated, and then shows them year by year, every year for the rest of their lives, how much they're going to be worth, how much income they're going to have, how many of their goals are going to be achieved. I mean, it is the greatest thing since sliced bread, if you ask me, when it comes to financial planning.
Yeah, that's a great point. And I think that's something now that has to be the standard. With the way technology is today, if you don't have a place where you can access all your accounts, whether it's a 401k held with your company, your brokerage account with your broker, your savings account, if you don't have a way to access all that information in one place, I mean, you're missing the boat. So I think that's got to be the standard moving forward. Because your point too, Bob, if I'm looking at projections for retirement, I don't want to know just the income I'm generating on my Morgan Stanley portfolio. I want to know the income I'm going to generate on all my portfolios, no matter where they're held. I mean, these are key parts to your planning. And that's why having a 360 portal is now the standard in the world of having a financial plan and a financial advisor.
And if you're sitting there thinking right now, I need a window into my financial life. I need to have a place where someone can store my wills and my trust, my insurance policies, where if something happens to me, my spouse can drop in and know what we own, know why we own it. And what we'd like to offer, if you're one of the next few callers and you've saved at least $200,000 for your retirement, my son Ryan and I will run for you your own personal total financial master plan. Now, there's no obligation and there's no cost. And if you're one of the next few callers, here's what we're going to do for you. We're going to review your tax return and make sure that your accountant did the job that you hired him to do. We want to make sure you're utilizing every tax benefit that the U.S. government doesn't so generously make available to us. We want to make sure that your estate plan is not an IOU to the IRS. Now, look, we know a lot of our clients, until they met us, didn't even have a will. If that's your situation, hey, let's get started. Let's make sure that we have everything titled properly so that your assets go to the people you clearly want it to go to. And lastly, we want to review all of your investment statements. We want to make it simple. We're not going to take it and create a book that you have to carry around you can't read. We're going to take all of your investments and reduce it down to our famous investment analysis spreadsheet. This is a simple 3-page document that looks at all the key elements of a successful portfolio strategy. The number one thing we're going to review is diversification. Are you diversified across asset classes and within asset classes? Did you take advantage of this big booming bull market over the last 8 to 9 years? We're going to look at the cost of maintaining that portfolio. Not just the obvious fees, but those costs that are buried and hidden in the prospectus, deep in the prospectus of your mutual funds or in those annuity contracts. Lastly, we're going to look at your income to make sure that you're optimizing the income that we all need to live on in retirement. And then we're going to put it all together into one customized total financial master plan, utilizing strategies that my son and I have been perfecting now for over 40 years. We're going to look at your own personal wealth projection to answer that age-old question. Are you going to outlive your money, or will your money outlive you?
So don't waste time. This is the most comprehensive view available at 844-PLAN NYC. That's 844-752-6692. If you have over $200,000 saved for retirement, and if you're one of the next 10 callers, we'll run that full review at 844-PLAN NYC. That's 844-752-6692. This is literally the most comprehensive review available. Take advantage of it at 844-PLAN NYC. That's 844-752-6692. This is No Payne, No Gain Financial Radio.
We told you earlier that Bob Payne is Managing Director of Payne Capital Management. This means he oversees all the portfolio designs and financial planning strategies for the firm. For 40 years, he's worked to change the way the financial industry approaches financial planning. He turned away from the traditional Wall Street sales pitch and pioneered a new approach to retirement planning, using goal-oriented, customizable plans that better fit your individual needs. Reach out to Bob and the team for a complimentary review by calling 844-PLAN-NYC. That's 844-752-6692.
It's time for Financial Pornography of the Week. This is where we scour the daily financial news and call out the biggest offenders of offering obscene and profane financial guidance so we can help you protect yourself from making any ill-advised financial decisions. So what was out there, Bob, in the world of financial pornography this week?
Well, as you know, there's been some horrible hurricanes here over the last couple of months, and most recently, the island of Puerto Rico got obliterated by Maria. And there were, something we talked about from time to time. There's an article about Puerto Rican municipal bonds. Now, municipal bonds, as we all know, are tax-free when it comes to your federal income tax. And since Puerto Rico is a territory of the United States, all their income was exempt on a state level. So what happened were a lot of these state municipal bond funds, the things that you really don't like very much, right, were the only ones out there that are buying this debt. Now, those bonds, these 8% tax-free municipal bonds, sounds pretty good, doesn't it?
Sounds really good.
Yeah, we're trading at $600 on 1,000 before the hurricane. What do you think happened, Rye, after the hurricane?
Well, $600 on every 1,000 is already a deep discount. So if I bought something for $1,000 and now it's worth $600, I'm not a very happy camper. But I think after the hurricane, and correct me if I'm wrong, it's more like I'm now at $400 on that initial $1,000 that I bought the bonds at. Ouch. Am I right?
You're absolutely right, because where before the government in Puerto Rico was talking about restructuring this debt, in other words, trying to replace these bonds that were selling at $600 with a better bond or a better strategy, That's all off the table now because the devastation of the hurricane has left them in really bad economic shape. So I feel really bad for the people in Puerto Rico, but I don't feel bad for people who buy bond funds that have bonds in there that you don't really know what's in it. That's why it's so critical to own high quality, institutionally priced bonds where the worst thing that can happen to you is you get all your money back with interest, right?
Yeah, and that goes back to an old saying, a Bobism, that more money has been lost chasing yield than at the point of a gun. So the point is, a lot of these bond funds and a lot of these investments out there that have a high yield or interest rate seem very attractive to buy, but you usually end up getting your hand burnt by touching the stove when it's hot. So a boring bond portfolio that you own where the yields maybe be a little bit lower is usually, when you're looking for safety in your portfolio, always the way to go. The other article I found this week, and I think this just goes back to a theme we've been hearing all year, I found an article that was entitled "Trump Tax Reform Rally Fades on the Market as Skepticism Takes Hold." First off, this has been a tremendously good year in the stock market. Earnings have come in from companies at better than expected. Companies are forecasting even better earnings going into the future. And once we strip away all the noise, Bob, what we always have to remember is the stock market is what we call a slave to earnings. So we have to remember that the Trump administration has passed nothing this year. And irrespective to that, markets have been going higher because what we would say the market's trading on what we call fundamentals.
Well, that's right, Rye. Fundamentals are the key, but it is a big discounting mechanism. One of the things that a lot of people don't recognize is that the U.S. is not the best performing stock market this year. It's actually been non-U.S. companies or countries. Now, what would you guess, Rye, is the best performing stock market in the world this year?
Since I do this for a living, Bob, I'm going to take a while to guess. I believe it's the emerging markets.
Actually, it was Poland in Europe. So Poland's doing better than the emerging markets even. But in second place was China. And of course, if you go back a year from today, all the pundits were telling us that, China was going to have a hard landing. They were going to have all kinds of problems, and there's no way their stock market could go up. That's for sure. I remember when you were on CNBC talking to that hedge fund manager, and he said, "I'm not a dime in emerging markets." And you were talking about how you were overweight the emerging markets until I have proof that they're doing better. Well, up 30%. Is that proof enough, son?
It's pretty good. That's pretty good. And I think it goes back to 2 points. Number one, the political noise, you have to ignore it. All year there's been talk about, well, the market will really get going if we get some sort of tax reform passed, if we get some sort of infrastructure spending passed. And you have to remember, none of these things have happened and the market continues to rally, which goes back to what we've been saying for a long time is, and if you look at it statistically, politics have nothing to do with the market. The other dangerous thing is, and this is kind of a golden rule of Payne Capital Management, is never anticipate anything. And what I mean by that is you can't anticipate what you think is going to happen next. At the beginning of the year, no one would have guessed that interest rates were going to come down and be a lot lower. No one would have guessed that Poland was going to be the best stock market in the world. We would have no idea. There's not an analyst on Wall Street that predicted that. So it's so important that you have what we call an all-weather portfolio that essentially addresses whatever could happen. Your portfolio is going to capitalize on that. And the way to do that is not to anticipate where the best place for your money to be is. Is it to buy gold? Is it to wait for tax reform? Because no one really knows, and whatever happens is going to be a surprise.
Well, the nice thing about bull markets, as opposed to bear markets, is that all the surprises in bull markets come to the upside. There are always positive surprises. Like recently, the GDP just came out at 3.1% for the quarter. That's the only 3% quarter we've had in 9 years. So no one predicted that. And just take a look at interest rates. No one predicted rates would stay down as long as they have. I mean, just last year we had Switzerland had a negative interest rate. So did Germany. Can you imagine? You have to give your money to a government for 10 years and pay them for the privilege of borrowing your money. I look back and I read every piece of data I could possibly get my hands on. No one in the last 10 years predicted a negative yield on sovereign debt. So don't invest on anticipation. You can't predict what's unpredictable. You can't know what's unknowable. And again, go with what you know and have a portfolio that's diversified where you have a certain amount of steady income, because income is much more dependable in capital gains. The gains are going to come, but you got to be in it to win it. And if you're not in it to win it, there's no way in the world you can take advantage of this big booming bull market we've been in now for 9 years, right?
Yeah, exactly right. And if you're thinking to yourself, I need a plan that's based on my goals, not what's going to happen next on Capitol Hill, not what some analyst thinks is going to happen, here's your shot to do it. If you're one of the next 10 callers, Bob and I, and you have over $200,000 saved for retirement, Bob and I will run for you our total financial master plan, and we'll do it with no obligation or cost. That's a full review, a full financial plan that addresses all the important issues. We're going to look at taxes. Are you paying unnecessary taxes? We'll have a CPA review last year's tax return to make sure you're optimized for taxes. If you bring in your legal docs, that will you had done 15 years ago, we'll have our estate planner review it, make sure it's up to date and what changes you need to make so it is up to date for the future, and bring in all those statements from all the different financial institutions where they're held. Bob and I will put all your investments on a simple 3-page spreadsheet, our investment analysis spreadsheet, and we'll look at all the key components. We're going to look at diversification or risk. What hidden pitfalls do you have in your portfolio? We're going to point them out in plain language. What fees are you paying? Are you paying a lot of hidden costs? We're going to break down all the fees in your portfolio and figure out if we can reduce the cost. And we're going to look at income. Income is so important in retirement. We're going to show you how to increase or optimize the income on your portfolio to make it retirement ready. Then we're going to tie it all together into one total financial master plan to make sure your money's going to outlive you, not you outliving your money, utilizing strategies now our family's worked on for literally 40 years to take your family from point A to point B with the least amount of risk and the highest odds of success.
And if you're one of the next few callers, we'll even give you a peek into your own personal Financial 360 portal. But you got to give us a call at 844-PLAN-NYC. That's 844-752-6692. If you're one of the next few callers and you've saved over $200,000 for your retirement, we'll run for you your own personal total financial master plan. No obligation, no cost. Just give us a call. 844-PLAN-NYC. That's 844-752-6692. This is Bob. This is Rye. We're in Santa Barbara with No Payne, No Gain Financial Radio.
Time for some New York City trivia. Did you know in the winter of 1780 it was so cold that the New York harbor froze over? You could have walked from Manhattan to Staten Island on the ice. Let's hope it doesn't get that cold ever again. Although if you had some sled dogs, it could do wonders for the commute. Anyway, keep listening to No Payne, No Gain. Mush!
It's No Payne, No Gain Financial Radio. And Bob and I's main goal at Payne Capital is to make sure you're always getting the best and most timely advice when it comes to your money, cut through the clutter, give you the best ideas and options. So in light of this recent Equifax breach, which is a big deal, we want to make sure you're protecting your wealth online. So if you text the word bullish, that's BULLISH, to 555-888, again the word bullish, to 555-888, you can access Bob and I's recent interview with cybersecurity expert Jessica Robinson, and she talks about ways you can protect yourself in light of the Equifax breach. It's so important that you're making the right precautions to protect your money, and we want to make sure you're prepared. Text the word bullish to 555-888. Again, the word bullish to 555-888. And if you want to learn more about myself and Bob, and you're interested in just see how great Bob's hair looks, you can always check us out on the World Wide Web at bbullish.com. That's bbullish.com. And if you ever have a question you want to ask myself or Bob directly, you can do that too. Email us, questions at bbullish.com. That's questions at bbullish.com. And if it's a really good question, we'll answer it right here on the show. And like every week, we receive some pretty good questions. The first one comes in from Tom. He's in New Jersey, in Jersey City. He says, Bob, what kind of annual return should I be seeking on my investments in retirement?
Tom, that's a great question. And, when it comes down to retirement, I think what people mostly should be concerned with is return of their money, not necessarily the return on their money. Because, we just don't want to go back to work to have to recreate this all over again. And that's why I came up with this device that we use at Payne Capital called the A to B process. And it all starts with, your goals. And I think most people's goals are to not only retire, but to stay retired and to live a life of, have a lot of fun in the life that they're living. So what we do is work backwards from your goals, to your assets. And when I invented the A to B process, right, I went back and I started with, what if I could invest Tom's money 100% in the only guaranteed investment there is? What would that investment be?
I mean, the only one I can think about is the good old-fashioned zero coupon bond.
Yeah, well, which bond? Issued by who, right?
The good old USA.
Yes. Well, and Ryan's absolutely right. The only guaranteed investment there is are U.S. Treasury bonds. Now, the reason is if the U.S. Treasury doesn't have the interest to pay you, what do, right?
They print more money, Bob. That's which is actually a problem nowadays. But you're right; they're backed by the printing press. It doesn't get more of a guarantee than that, I guess you could say.
Right. If they don't have the money, they just print it. And a zero coupon bond is even better because you don't have to worry about reinvestment risk. Now, when I run an A to B projection, when I run a projection for someone in retirement, a lot of times you're going to find out that really a zero coupon treasury with rates so low is not going to do the deal, right? It's not going to get you there. So if if you fall short, then you should start to introduce risk and volatility. And what type of volatile assets would you add into a portfolio, Ryan, that couldn't achieve with a zero coupon treasury?
Well, we obviously advocate, having some sort of stock exposure in your portfolio for two reasons. Number one is dividends. They pay dividends and they increase their dividends over time. And that's one of the things you have to think about in retirement is your expenses are going to go up over time. Having an increasing cash flow investment like stocks is a huge, huge benefit.
So, Tom, you want to create a portfolio that gives you the highest probability of getting most of your money back, regardless of what happens to the economy and with geopolitical risk and all the other things that we deal with on a daily basis. But we also want to make sure that you're overcoming inflation and taxation. And so simpler is better than complex, and having a process-driven strategy is the only way to go.
Yeah, by running those retirement projections, we can literally determine exactly what return you need on your investments. And if you don't know that information, you can't really build a portfolio. So never put the cart before the horse. Don't build the portfolio, then look at what your retirement's going to look like. Let's paint a picture for retirement first, and then go back and look at building the portfolio. And we see it the other way around all the time. Let's put together some investments, and we call that a strategy and hope, not a strategy based on your goal. So you don't want to have a strategy and hope. You want to have a goal-based strategy. The next question that comes in is from Alex. He's here in Midtown Manhattan. He writes in, Ryan, I've seen a lot of growth in my 401k recently, which has been nice, but I feel that I should capture these gains and take risk off the table. Good point. On the other hand, what if the market keeps going up for another year or two and I miss out on that growth? This is a great, great question. And I think this is one I have to think you're thinking about with your own portfolio. Let's face it, it's been a great market now. We're in our 9th year of a bull market, which is just incredible. So the question always becomes, well, maybe I should just get out, go to cash, and wait for a pullback. But what if the market keeps going up? And this is one of those reasons why I talked about earlier in the show. Don't anticipate on your portfolio. Ideally, you always want to have money in the market. So if it keeps going higher, well, great. You'll participate in the growth. On the flip side, at some point, you will get a correction, and it's unpredictable ahead of time. That's why it's important to have safe investments in your portfolio as well to offset the risk. And that's why, as you say, Bob, you never go broke taking a profit.
Alex, it's so true. And I think the one thing we all have to recognize, whether it's real estate or baseball cards or stocks or bonds, as prices go up, it doesn't become a better opportunity to invest, right? As the things become more valued, it's not a better value to invest. And managing risk, as we talked about earlier, is really the key to having a successful portfolio strategy. And that's the hardest thing to do because we can't predict what's not predictable, and you can't know what's unknowable. So rebalancing your portfolio on a systematic basis, Alex, is going to give you the highest probability of getting the best return on your portfolio with the least amount of risk.
Yeah, which just brings one more point, and I hear this often, is let's cut our losers and ride with our winners, which is so counterintuitive based on what you just said, Bob, because as things go up in value, they become less valuable. So the key is you actually want to add to the things that are out of favor in your portfolio, trim back on the things that are in favor, and that's why that rebalancing is such a critical component to a properly diversified retirement plan or when you're building a properly diversified portfolio for retirement.
Yeah, it's exactly what we found out a couple of weeks ago, Ryan. We recommended everybody take some money out of growth and add it to value, which was lagging. And now value is outperforming growth. Surprise, surprise. So it's kind of like common sense, but sometimes the thing that's always lacking when it comes to investment is common sense. And if you'd like to have a portfolio where someone's paying attention to valuation and making sure that you have the highest probability of getting return of your money as opposed to the highest return on your money, what we'd like to offer, if you're one of the next few callers and you've saved at least $200,000 for your retirement, my son and I will run for you our total financial master plan. Now, if you're one of the next few callers, here's what we're going to do for you. We're going to have our CPA partner review your tax return to be certain that you're utilizing every tax benefit that's available to you. Secondly, we're going to have you bring in your legal docs. We want to make certain that your estate plan is not an IOU to the IRS. We hope not. And lastly, we're going to review all of your investment statements. Now, I know they just came in for the month. They're sitting on your desk. Don't even open them. Throw them in a shopping bag. Make an appointment. We'll do all the work. We'll reduce all those complex statements down to one simple 3-page document, our investment analysis spreadsheet. It'll look at all the key elements of a successful portfolio. Diversification. Are you properly diversified? Are you participating in this rally in small cap stocks, in emerging market stocks, in the European market? We want to be certain that you're diversified across asset classes and within asset classes. We're going to look at your fees, the cost of doing business, to make sure that you're getting the return that you're paying for. And lastly, we want to be certain that your portfolio is optimizing all the income that's available in the portfolio strategy that you're utilizing. And lastly, we'll tie it all together into one customized total financial master plan, utilizing strategies that my son and I have been perfecting now for over 40 years. We want to help take your family from your point A to your point B, to your goals, to your dreams with the least amount of risk and as much certainty as any fiduciary can provide.
Don't waste time. Give us a call at 844-PLAN-NYC. That's 844-752-6692. It's a comprehensive review. The only one I know that's available at 844-PLAN-NYC. That's 844-752-6692. We have a couple slots left. If you have over $200,000 saved for retirement, give us a call at 844-PLAN-NYC. That's 844-752-6692. This is No Payne, No Gain Financial Radio.
From your first encounter with the Payne Capital Management family, you'll notice a difference. First of all, the team doesn't represent any institutions. They represent their clients. That's the power of being independent. They really separate themselves from the large brokerages in how important their personal relationship is with you, the client. You can expect frequent communication about your plan from the team. You'll have the freedom to select top investment strategies, not just one particular product. And as a fee-based financial advisory group, Payne Capital Management embraces its fiduciary responsibility to help you make decisions that serve your best interest and no one else's. See what the PCM difference is all about. Call today for a complimentary review. 844-PLAN-NYC. That's 844-752-6692. Here's this week's Spotlight on No Payne No Gain.
It's Ryan Payne, Bob Payne, No Payne No Gain. And again, one of the things that we want to do here at Payne Capital is just educate you, make sure you've got the best advice out there and the most timely. And in light of this recent Equifax breach where people's credit was compromised, it's really important to make sure you're making the best decisions about protecting yourself online. So if you text to 555-888 and put in the word bullish, that's BULLISH, text it to 555-888, the word bullish. You can hear Bob and I's recent interview with cybersecurity expert Jessica Robinson and just find out some of the recommendations she has on how to protect yourself online. Very important, very timely, something you need to look into now. Text the word bullish to 555-888. Again, the word bullish to 555-888. And it's time for my favorite segment of the show, our Spotlight segment. And this is where we actually take a real retirement plan and we look at some of the flaws, or what we call pain points, that's PAYNE for the record, that these retirees were making with their money, so you can avoid a lot of the same mistakes. And to go through this case, we are bringing on the best Payne, my brother, the famous or infamous, depending where you are, Chris Payne. Chris, you worked on a case this last week. Why don't you walk us through it and give us the rundown of some of the mistakes that this couple is making with their planning?
Thanks, Rye. So this is a case that we worked on. This is a couple that lives up in New York. They're in their late 80s. So at this point, a couple things that I noticed about the portfolio right off the bat. For someone that's in their late 80s, they really didn't need a lot of risk. And at this point in time, their portfolio is about 50-50, so half equities, half bonds. More importantly, I noticed that most of the money is very highly concentrated in large cap U.S. stocks, which is typical of about 99.9% of the people that walk through our door. So first and foremost, they're taking a little bit more risk than they need to. And then secondly, from the bond standpoint, all of their fixed income was tied up in bond funds. So those are the two of the biggest risks that I noticed about the portfolio. Secondly, all the funds that they own in the portfolio are high expense mutual funds. So they're taking too much risk. All their money that's in bonds are in bond funds. And then thirdly, they're in high expense mutual funds.
Chris, just out of curiosity, so this is a couple who's, like you said, in their late 80s. I mean, this is clearly a risky portfolio. I mean, what I like is when you run the projections, you show that in a down market, they would go down about 25%. Based on what this portfolio did in 2008. Were they even aware of the risks that they were taking in their portfolio?
Actually, he was aware of the risks that he's taking. He was big on return, but what I showed him when I ran through the projections was that he really doesn't need to take the risk. And I showed him what would happen if the portfolio went into a bad market, or even more importantly, if interest rates start to go up.
It amazes me today, too, with all the statistics out there. We know based on history, based on the last 15 years, that mutual funds consistently underperform, professionally managed mutual funds, that is. And in the world of exchange traded funds that we're big advocates of, where you own the index, it just amazes me. Did they even realize they had other options besides these high cost mutual funds, which have all underperformed for now, in some cases, over 15 years?
He actually was aware that there are lower cost funds, but I think with a lot of the folks that we meet with, he was blinded by the opportunity of potentially getting more return because the portfolio was actively managed, right?
Yeah, and the crazy thing is, it didn't perform better.
No, you're absolutely right. And the other thing I noticed that you really can't see in the portfolio that I'm showing you is, and this is really important as to why people should work with a fiduciary versus working with, somebody else that's not beholden to them. They also have a couple of annuities. And more importantly, he had an annuity that was out of surrender that we could have very easily have rolled over. But I actually suggested that he roll it over and do what's called a 1035 exchange into a lower cost Vanguard annuity. And the reason is because of the tax consequences if he had actually taken that money out and given it to us to manage. So, more than meets the eye is the tax consequences of making those decisions. And, when it comes to the client, our responsibility is to do the best thing for the client, not necessarily the best things for us.
That's really a great point, son, because you talk about why it's so important to work with a fiduciary. Now, you have two salesmen that these people worked with in their lifetime. One salesman sold them mutual funds. Now, there's an obvious lower cost alternative today in index funds. It's well known, it's documented. There's 65 years of academic research now to back it up. No one picked up the phone to tell these people they could get a higher return, lower risk, and a lower cost because they already got their sales commission 20, 30 years ago. Then you have an annuity salesman who sells them a contract, gets paid a commission, then never to be heard from again. And, there's no incentive on the part of these mutual fund companies, on the part of these insurance companies, to call up their clients who they say they care so much about to let them know that there's a better deal. And this is why these types of analyses are so critical, because we could look at this with a cold eye. The client can clearly see what the costs are. It's all spelled out, but no one else takes the time to do it because there's no incentive for them to grab a commission.
And the other nice thing is here, Chris, I saw you built them one of our 360 portals so they could see what everything looked like in one place. That's the other thing. The question is, well, I have an annuity over here. I have a brokerage account over here. How does this stuff all work together? And that's why it's just so critical to have a place that you can view everything. And I see you put together for them a sample portal so they could see, all of their assets in one place, and especially now that they're in their late 80s. How important is it that they have everything, basically summarized in one portal to look at?
I thought the best story you told me about this case, Chris, was the fact that you had a couple who'd been together a long time, But it turned out only one spouse really understood where all the money was and where it was put and how to get to it and understood it, where the other spouse didn't really have any idea. And now with this 360 financial portal, something happens to that decision-making spouse. The spouse who's not involved can just pick up the phone and say, hey, Chris, pull up that website again. Show me again where are all my insurance policies held? Where's the will? How much am I worth today? Oh, I can look every day. It's updated automatically for me. How much income do I have? How are my bills being paid? No longer do you have that panic phone call in the event that a spouse passes away and the other spouse realizes, I don't know how to write a check. I mean, what a great service. What a wonderful thing you've done for these people. This is another magnificent total financial masterpiece on the part of Chris Payne. Good job, son.
Thanks, Bob. And a lot of times I think that our 360 financial portal is more like finding change in the couch, because a lot of times when people are going through here, they remember, oh, you know what? I've got that account or that 401k with Wells Fargo or Merrill Lynch that I forgot about. So a lot of times you'll go in and you'll say, hey, here's some more money that I had that I didn't realize before.
Sometimes that can be pocket change of like $100,000 you forgot you had at a credit union somewhere from years ago. And if you're thinking to yourself, this is the kind of review I need. I need to be able to access everything in one place. I need to look at what fees I'm paying. Here's your shot to do it. We have a few slots left. If you give us a call right now, Bob, myself, and Chris Payne will run for you our total financial master plan, and we'll do it with no obligation or cost. It's a full review just like this, where we're going to look at everything. So if you have last year's tax return, we'll have our CPA partner review that, make sure that you're optimizing your portfolio for taxes, not paying unnecessary taxes. If you bring in that will that you had done 20 years ago, we'll have our estate planner review it and let you know what changes you need to make to update your estate plan. And then finally, bring in all your statements from wherever they're held. We're going to put it all together. We're going to show you what a 360 portal looks like so you can view all of your information in one place. We're going to do our famous investment analysis spreadsheet so you can look at, can you increase the income on your portfolio? Income's critical in retirement. We're going to look at all those hidden fees, those mutual fund fees you're paying, those old school investments you need to get rid of. We're going to look at those high cost annuities and see if we can reduce the cost. And then what we're going to do is we're going to tie it all together in one total financial master plan to make sure your money's going to outlive you. You're not going to outlive your money using strategies now we've literally perfected over 40 years. So myself, Chris, Bob, can take your family from point A to point B with the least amount of risk and the highest odds of success.
So let's let the Payne family help your family. Give us a call at 844-PLAN-NYC. That's 844-752-6692. If you're one of the next few callers, you've saved over $200,000 for your retirement, we'll run for you your personal total financial master plan. No obligation, no cost. Just give us a call at 844-PLAN-NYC. That's 844-752-6692.
Well, great show on location today in Santa Barbara. The Payne team or the Payne family is happy to be here. Chris, thanks for being on the show. What are we going to do the rest of the afternoon here in sunny Santa Barbara?
I don't know yet, Rye, but I'm sure it's going to be fun and relaxing.
Working on that tan, Chris. Big Bob, what are you doing the rest of the day?
Rye, since it's your mom's 65th birthday, I'm going to do whatever she tells me we're going to do.
That's the recipe for a successful marriage. Well, have a great rest of the weekend, and as always, be bullish.
Information provided on today's show is provided for information purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with an investment, legal, or tax professional before taking any action.